Good evening. Thank you all for being with The Real Deal today. We are obviously in the middle of a global pandemic, the human costs of which are yet to be fully understood and cannot be quantified. And first of all, we hope that everyone is safe and taking care to keep themselves and other people safe. We do appreciate that you've joined us at this time to try to navigate what this means for the industry and today what in particular it means for development. But on the economic side, there is a number. I was reading this morning today that DealBook called this a $4 trillion hole in the global economy. And one of the cornerstones of that economy, obviously, is real estate. So we're fortunate today to have some industry leaders who are going to help us understand what's going on now, how they're preparing their businesses, and what they see in the big picture. This is unprecedented, but we have been through some crises before. So we will get started with this discussion. I just want to introduce our panelists and thank you all for coming. I'll start with Ryan Freedman, who's the co-founder and CEO of Corrigan Ventures and an active developer in South Florida, New York, and beyond. Then we've got Miki Naftali, who's the founder and CEO of the Naftali Group. Again, one of the most active developers and investors in the New York area. And we have Steve Witkoff. Steve has pretty much developed everything, invested in everything, and his array of businesses runs from hospitality to retail to condominium development, and he's seen a few of these things before. So, gentlemen, welcome and thank you very much. I also want to thank and point out our sponsor, Heidi Henderson from Engineered Tax Services. And Heidi, I'll give you the floor and then we'll get started.
Okay, thanks so much. I appreciate you having us, and we're excited to sponsor today's event. There is so much happening in the market, and a little bit about Engineered Tax Services. We are a specialty tax firm, nationally based. We have 160 employees across the United States with offices really spread out across the country. We are able to specialize in really looking for every potential incentive that may be available for projects, whether it's renovations, recent purchases, or ground up developments, everything from cost segregation to energy incentives that are often missed for 179D deductions, 45L credits for energy efficient multifamily units, historical tax credits, really a broad array and myriad of different tax incentives that we specialize in and focus on that can be tremendous for your deals and for your projects as you're working on them. And we really have the ability and capacity to work on everything from the largest projects in downtown Manhattan all the way to really small single-family residential portfolios, small homes that investors might have 4 or 5 or 6 or 7 properties. So we are thrilled to be a part of this group and hope that we can be a resource, especially looking at bills as they come online and changing tax code areas. One significant one is we're obviously looking at this potential stimulus package. This package has some, if passed or passed in any form, does have some very significant tax benefits for businesses, for employees, and again, will help expound the existing benefits for real estate investors. So stay with us. Please reach out, engineeredtaxservices.com or myself directly, and we can consult on those issues and make sure that nothing is being left on the table. So thrilled to sponsor today. Thanks for having us.
Thank you, Heidi. Thank you for your support. So we'll get started. Steve, I'd like to start with you. We're editing this book, and we have this very dramatic story about yourself right after 9/11, taking the American flag up to the Woolworth building and essentially using that your property as a almost like a triage location. That was one singular event, and then there was a long recovery. Whereas in this case, this is a completely amorphous event. We don't know when this is ending. We don't know how bad this is going to get. But in your career, if you think about 9/11, if you think about the recession that we saw in 08, 09, what is the closest parallel to what we're seeing now? How would you kind of historically, where do you put this?
I think it's the worst. From a travel perspective, it reminds me of 9/11 because the airlines were shut down as they are here. I think that was more scary because of why air travel was shut down back then. I think that people were really unsure about security arrangements. And today you could fly, you could wear a mask, you can sanitize. And so I think you could get on a plane and feel relatively safe. But this event is the first time ever in and I've read books on financial crises, and so, but it's the first time ever that we've had at the same time a chain of supply shock to the system and a demand shock to the system, both at the same time. And I think in the beginning, it's surprising to many because the mortality rate was not all that much higher than the normal flu. So people dismissed it a little bit. But I think they're beginning to see that this is not about how many have died, which is obviously incredibly unfortunate, but it's about the effect that it has on an overall economy, because we're a correlated world today. And so both situations of supply shock and an enormous demand shock. The medicine right now is we've got to shut down demand. Got to shut down hotels, football games, all these different things. Mm-hmm. That means that potentially the cure could be worse than the actual disease.
You're talking about in terms of the economic impact, the cure that's necessary.
That's correct.
Okay. And Miki, let's talk a little bit about, we have a lot of people on this call who are aspiring developers, experienced developers. I think one of the big things that everyone's trying to figure out is the money, right? The lenders. What sort of conversations are you having at the moment with lenders? Are workouts happening as we speak? Is there any sort of delaying tactic? I know that a lot of developers work with incremental loans, incremental timelines. Just give people a sense, and then Ryan as well, a sense of the general status of where you guys are with lenders.
So we are lucky enough not to be in a position to have a discussion with lenders about the existing portfolio because our entire portfolio is well financed at a relatively low leverage, and we don't have at this point of time any dramatic or any issues in our portfolio. The entire portfolio is a residential portfolio. The income producing is a residential portfolio in relatively high demand areas. Of course, we expect to see some change in the near future, but nothing, because we never believed in high leverage. I don't think that we'll have any substantial issue. We are about to close a very big transaction, a very big development deal, which is a rental construction project. And I can tell you that I'm very happy that the commercial lender that we are working with is very much supportive of the deal. There is no change. This is a long-term relationship that we established way before September 11 and way before the 2008 crisis. And, we all know that, and I want to say something about what Steve said, but going back to the history, we all know that we are right now at a very difficult time. And I encourage everyone to think about the future, not about the situation that we're dealing right now. I just want to remind everybody, I don't want to take too much time. Going back to September 11, I had two projects in Chelsea, two condominium projects in Chelsea. I just opened the sales office for both of them 2-3 months prior to September 11. 6 months after September 11, or during the next 6 months after September 11, we couldn't sell anything. Mm-hmm. Following that, everything went back and we sold everything at exactly the same numbers that we predicted before September 11. I want to remind one more thing. If any one of us on the call today or anyone that is listening today would ask the following question the day after September 11 or even 3 months after September 11, would anyone with any buyer would ever buy an apartment in New York City or any other city on the 40th floor, 50th floor, 60th floor? We never spoke about 70 and 80 and 90 and 100, right? And what happened after that? Yes, it took a few years, but we built mega towers, and buyers bought those units, not all of them because of price, but the fear completely disappeared. So my only point is, I actually think that we are in a very difficult position right now, all of us, but I think a year from now, we'll be in a completely different position and there will be a lot of opportunities.
This is the classic, you just, exhibited the classic developer trait, which is optimism, right? You cannot build in New York unless you are an optimist. And I understand that, but I also think that what is different about this, and Ryan, let's have you weigh in, is this is not a one-off singular event, right? We don't know where we are. And yes, there was uncertainty and tremendous fear after 9/11, but there was an event and then there was the bill. But Ryan, let's get you in.
Yeah, so I think the fact that we're all in this together and that this is happening to the world at the same time, I think allows us to come out of this in a much more organized manner, right? The consumers being affected, businesses are being affected, their landlords are going to be affected because they may or may not be able to pay rent, and their lenders are going to be able to be affected, right? So you have the full stack of the full real estate capital stack, in essence, needs to work together to get through this. And I think it's going to look very different in every scenario. There is not going to be a one medicine fits all here, right? If you have a hospitality asset, it's going to look very different, and your lender's going to understand it looks very different, and you're going to have to figure that out. We don't yet know what the full impact of our portfolio is. We have NYU master leased assets downtown. Those assets have been emptied, and we have been put on notice by the state that they may be taken over to become hospital overflow. So you're talking about things that are completely unprecedented, and we don't know what happens at that point. Does NYU pay the bill? Is this an insurance claim? Does the government step in? What we do know is that we're all on the same page. We're all dealing with the same things. We all want this machine of our economy to turn back on. And as long as people are dealing with it in a rational manner and taking, the stakeholders into consideration here, I have to understand that my retail tenants are going to have an issue and be able to work with them. And if it's so bad that I have a problem with my lender, I'm only hopeful that my lender will work with us on that.
Mm-hmm. And what does that mean? And you mentioned the government, and they made this decision that they might take over part of your portfolio. Steve, in terms of what you're seeing at let's say the city, state, and federal level, do you think our leaders, our elected officials are doing enough? We're seeing mixed messaging, let's say from the likes of Governor Cuomo and Mayor de Blasio, where there's been just some jockeying about who announces what, and the initiatives aren't quite lining up. And I would imagine that right now, more than anything, we need clarity. And then we have the federal level, which we should also talk about. So what are you seeing so far? And anyone who wants to jump in, please feel free. Go ahead, Steve.
Well, the first thing I would say in answer to your question, I agree with Ryan and with Miki that this feels a lot more like 9/11. We've got a war. And so, the first thing you study when you've taken a political science class, which I was a major in before I went to law school, is what they call the rally around the flag syndrome, where everyone comes together. That's what it was like in downtown Manhattan back then. It was people coming together. And I think really for the first time in 3.5 years, we're seeing politically people coming together. That's what Ryan was talking about, people being sensitive to stakeholders. I can't imagine a credible bank in the United States of America calling a default on a loan today. Mm-hmm. I just think it would be unpatriotic and un-American unless they were dealing with someone who is bad and malevolent. So, and I believe that to be the case today. I think it would have been great if Congress and the Senate would have figured out the fiscal stimulus package today, mm-hmm. because it's a lot of money. And it's a lot of money for a lot of different people, but probably they're going to figure it out in 48 hours. Chuck Schumer has said he thought it was imminent. Now you've got some pounding of the chest, and I'm not sure that sort of juvenile behavior is good for anybody, but we had that in 2008 too, right? And we're going to sort of get through it today. But the Fed, slightly behind the curve, gets an A+. By the way, the system, Hitem, was seized up on Friday night in U.S. banks. Mm-hmm. And that's a simple fact. The reason the Fed made their announcement today, which moved the market substantially, So they were basically saying that they're going to take all the agency product off the hands of the big banks, which would liquefy their systems and allow them to get into the credit risk business, which is the business we're talking about right now, lending to developers like Ryan and Miki and me. So I think if you really want to be hopeful, what I'm hopeful about is that everybody appears to me to sort of be bought into wanting to be a part of the solution. And that, I think it begins with that. If you don't have that, you almost don't have a chance.
What about at the city and state level, Miki? Go ahead.
So I think that I agree with Steve 100%, but I want to say the following. I think that the beginning, the response was way too slow. But there is no question that in the last 2 weeks, the response on the federal level, the state level, and the city level is much better. I think that the one thing that we should do is still up in the air, and the only way to deal with this war, as Steve described it, is to close down everything for 30 days. We can't continue to play the game that some of it is open, some of it is closed. New York is a hotspot. In Florida, people are on the beach and partying and whatever. Of course, they are transmitting the virus. The only way, because look, the economy cannot sustain now 6 months, 8 months, 9 months of this ongoing half closed, half open. It's not going to work. The only way to deal with it is to close everything for 30 days. What are we asking from people?
By everything, you mean everything non-essential, every kind of construction?
Except obviously hospitals, supermarkets, and pharmacies. Everything. Just sit home. What are we asking from people? To sit home, be with, and frankly, I'm telling you, we are very productive. We're working the same as we're using right now, Zoom or other applications. My entire company is off the office for at least 2 weeks, if not 2.5 weeks. And we're working as much as we can. Stay home. And that's the one thing that I still think the federal government has to do, to instruct everybody to stay home. Because if you move from one state to another state, from one city to another city, it's a never-ending story.
And to that point, I mean, this is something I wanted to get to, but I believe one of our audience members, Howard has asked this, Howard Tressler, has asked this question as well, which is, what does this mean for the future of New York City real estate? Because, look, everything we've been doing in the last, let's say, since 9/11 has been about density, or even, the last 50 years in New York has been about density. Dense is better. Every sort of legislation, every talking point developers have, builders have, is that a denser city is a more prosperous city, a more rewarding city, and a better, more interesting place to live in. This crisis, unfortunately, has really shown one of the dangers of density, right? Where I'm in Los Angeles at the moment. It is bad here, but what we have in New York is a different level. So, Ryan, let's get you in. Density, the perils of it. I mean, I'm sad to see that, but I think these are questions that are coming up now.
Yeah, I don't think any change of density to any magnitude that would be reality would really affect the difference here. I mean, this is a global pandemic that is spreading everywhere. I'm in a small town in Colorado right now, and we were one of the first towns to outbreak here. So there's no issue here around cities are too dense or not too dense that's gonna solve this problem. I think Miki has a great point in that shutting things down for 30 days would almost rip the Band-Aid off quicker and better and faster. I don't believe that's the reality of the situation. I don't believe the federal government is ready to make a decision like that. And so I think the federal government made some critical errors early on here, and we're playing catch up. And lives will be lost because of that catch up that's being played. I think Governor Cuomo has done a great job at showing leadership and doing everything he can do to get the state of New York prepared for what's happening now. The hard reality is that somebody, and whether that's at the federal or local level, is going to have to make the very difficult and very controversial decision to start opening things up again at some point. I'm sure at this point, we all know somebody that has been infected. I think I know a dozen plus people. They're going to be immune to this. We're not sure yet if they can retransmit or not and what that time frame is. But at some point, you're going to have to send that first batch of people back into the workforce and restart this economy. The reality is we will not get back to normal until a medication or a vaccine exists. We will simply slow down the curve. So once the majority of the curve has this virus, the herd immunity begins to go out there. You can start to restart industry and economy a bit, but there's still going to be a touch and play here. And as long as that uncertainty continues to exist, and you or I and the people listening here aren't sure if we had it, we're not sure if we have immune to this, we're not going to be back to normal. And that difficult decision is not even taking into consideration older demographics and people with immuno issues who may have to be home for a very long time until we have a solution to this.
And this is the thing, right? It seems like it has to come from the federal government, because even in the industry, the messaging is very mixed. We got an alert today that the building trades has asked for construction sites to remain open, right? So there's not any consistency of messaging.
They're still open.
Right, but they are asking them to remain open. So there's no consistency of messaging within the industry as well. I want to move on to supply, but one quick question on just some interesting developments that had happened last week. Steve, this might be for you. EB5 is apparently in talks to make a comeback in a big way. There's been a proposal reported that would increase the cap from 10,000 to 75,000 visas and lower the threshold by half. It is half baked at the moment. It's not finalized or anything. But any thoughts on what that might do and sort of the potential ups and downs of that?
I'm not aware of the EB5 legislation. So look, any liquidity in the market is good, but I don't think this is a liquidity issue. The EB5 is mezzanine financing. I think the banks are ready to lend. I mean, we have.
Right.
The really good news is this is not a financial crisis.
Right.
You have the largest banks in this country with fortress balance sheets. If this was a liquidity crisis, we have a real bigger problem. And Europe's got the bigger problem because they did not take the strong measures that we took. So those balance sheets of those banks are solid as a rock. And that's a really big deal. When we come out, and I agree with Miki, we're going to come out of the other end of this thing, and I believe that there's got to be optimism, not just developer optimism, but optimism. It's part of the patriotic thing, and I believe that you've got to feel that way. All of us have been through these things, these events, and we've come out the other side. And sometimes to get to the other side is frustrating, but all the ingredients of it. I mean, look at the medicine that they're talking about throwing at this thing. I mean, $1.4 trillion of stimulus, and 500 million of that package can be levered with the Fed. Maybe it's 6-1. That's $4 trillion of stimulus plus a Federal Reserve Bank that might have been slightly behind, but guess what? They're catching up pretty good now. So that's a big deal.
There's a playbook here that didn't necessarily exist the last few times we went down this road. They understand, we had money markets go down for a day and not come back at $1 in the morning. They understand that. They short up money markets. They understand liquidity needs to be pumped into the market. And so the playbook is in play. I think this package that'll make its way through Congress by the end of the week will be sort of the final piece to keep all the systems moving. But the fact that all the systems, all the markets, all the banks, everything is still functioning with the level of volatility that has existed is pretty outstanding.
And Jim, let me just add one point to what Ryan is saying, which I think is interesting. It goes to your density question. But density's never going away. We need density. We need density because we have a lack of land.
Right.
And so that's part of the problem. In San Francisco, they've got to be more dense. And so, and even people who are affordable housing advocates understand it. So New York City, we're never getting away from density. Your question goes to, well, does a dense city where you're in close proximity to one another encourage the spread of something as contagious as this? We're going to kill it. There's no doubt. I mean, it's Corona. And Corona is from the common cold, and SARS was a derivative of this, and this is a permutation of that. So we're going to kill it. But that being said, what also could emanate from this? We could all get a lot smarter about emergency management. We might, the next time, 5, 6, 10 years from now, have a much better tuned in response to the next germ that affects us. We know from this episode exactly what we should do the next time around. No different than they forged up the bank's balance sheets and they're in good shape today, and that's going to be part of the solution here. So there could be some good things that come out of this for future generations.
I do think density is here to stay. I am though curious about what you think, and Miki, let's get you in about the high end, right? You know, people who can afford to buy 20, 30, $40 million homes, the type of product that many of you do build, they might be rethinking this and say, you know what, the Connecticut life seems like an okay deal right now, given what's happened. Miki.
Yeah, it's boring, but let's talk about density for a second. I agree with everything about density. So the density at large is not going to change. What I think will change for the short to mid, period is this entire concept of the Z generation about the WeWork of the world and sharing, living sharing, and being with 30 people in a small area, drinking tequila shots every second of the day. This is something that I think will take some time to come back. My prediction is going to take years to come back, but not overall. When you speak about the overall scale of the city and how many buildings and how tall the buildings are going to be and how many people will live in New York City or in other cities, I don't think you can change the overall demographic, that there is a major movement throughout the world, from the suburbs to major cities around the world. And I think we'll continue to see it. It's going to take a pause right now, but we're going to continue to see it probably early next year.
Okay, let's talk a little bit about the business of brick and building, right? Supply chain. I think Steve, you had mentioned at the top of the hour that supply has also been constrained, and we're seeing, your materials, all your essential things to put something up there might be an issue in the supply chain. How have you navigated that so far? How serious is the problem? Whoever wants to take this one.
We've been fortunate that our jobs are finishing up, so all the supplies are on site. But another issue that has shown up is that we have 400 units coming online in Raleigh in a few weeks, and we need to get a CO. So we need a building inspector to come out, and we need HUD to come out and do an inspection. And so we may have 7 buildings sitting there empty until we can get that done. So from a supply chain of people and approvals, that's top of mind for us right now. Fortunately, we're not missing granite countertops or anything like that along the way.
Steve, if I know you well, you're probably got 10 projects going on at the same time. So tell us about where you are with and how the supply chain disruption might be affecting your business.
No, we actually only have 2 projects. Land was expensive, and so we really only have 2. We're vertical on a project in Santa Monica, a rental project, and we're building and moving, and that's all good. I think the supply chain thing is, it's a little bit more complicated. There was so much manufacturing coming out of China, and there was so many things. There were things coming out of Vietnam. Shipping has been shut down, and it's hard to deliver all of these things. So that supply chain shock, we've got a correlated world. And so even getting things from Mexico, there's plenty of things that come from Mexico, and it's not so difficult to ship those things today. So that's one aspect of it. And you combine that aspect, if that existed alone without a demand shock, without people sitting at home because they have to sit, because they've been told to sit at home. And Mickey's right. I find it outrageous. And now you see leadership. You see the president every single day in a news conference. You heard his Surgeon General today saying to young kids, we see it. There were pictures of boats. I think there were maybe 1,000 boats around the sandbar in Miami yesterday. And they were just people sort of I would call it recklessly
Right.
communicate.
It's all happening now. It's just coming a little bit later than we needed it to come. I think the awareness is arriving.
It's also disrespectful. I mean, it really is. There are, I mean, you don't know if you come home and you have elderly parents who live with you, if you transmit to them. It's one thing, by the way, kids survive this thing, but it's the elderly or worse yet, I have a niece who's fighting a battle with cancer today. If I inadvertently met somebody who was asymptomatic and I brought that germ home and I niece because I wanted to wish her good things, and I gave that to her, that would be a death sentence potentially. So I agree with Miki. Now he understands it because he's Israeli, and that culture was they've been fighting wars, and he's been hearing about that from his parents and his grandparents, and it's an incredibly patriotic society. That's how it was September 11th, and we need to be a lot more like that today. We need to understand that we're all in it together. I had a conversation with all of the employees in my office on a conference call today to let them know how we saw it, how we thought it was going to play out, what that meant for them. Would we need to terminate anybody? If we terminated anybody, how would we deal with health benefits? I think that was my responsibility. And it was a tough telephone call for me to have with all of these people because I'm the one in the best shape of anyone on that telephone call. But, you've got to make long-term decisions when you're running a business. And so we don't intend to necessarily do anything today in that regard, but we felt it was important that we have that telephone call. But I think that's part of what my responsibility is by the way, not as a business owner, as an American, as a citizen of this country and this state. When I see Governor Cuomo, who I think has done an outstanding job, or the president, who every single day is holding a press conference, when I see them coming together, or Gavin Newsom, I think that's a really big deal. And, lots of leadership examples out there. And I think that part of what Miki and Ryan were saying is that in our own little world, it's important that we do that. We carry on that message.
And I was going to say, all three of you are in a fortunate position where you don't have to necessarily make moves, or you could figure out how to sort of keep the house in order. Miki, I wanted to get you in and get your sense for a lot of younger developers, maybe who had just started off a year ago, 2 years ago, may not have the institutional pedigree that you guys do, may not have the relationships with banks, and are really going sort of cowboy project to project the way you all did at the beginning of your careers, right? There's a lot of anxiety among that group. And what would you say to them? Whoever wants to jump in after Miki, please do as well. But there seems to be a lot, I just got started in this business. I just put my JVs together. I just spoke with the banks, got this line of credit. What the hell do I do now?
Right. I think they have to be very, very careful, extremely careful. This is, this is like when you're a captain of a boat and you are going into a really rough water. You have to be very, very careful. You have to, you can't think only about, I think to be only optimistic and everything will be okay in a month or 2 or 3. You have to think about the downside. You have to be very careful not to overpromise and not to take risks to risk your entire house or whatever you are pledging to it. And sometimes I have to tell you that sometimes it's better to do nothing and wait instead of doing things and then find yourself deep in the hole and walking 3 years to try to dig yourself outside of the hole. Maybe you'll be successful doing it, maybe not. Sometimes it's better just to wait, let everything calm down, just wait and wait for better days to do something.
You got to make sure that those deals make sense still. And I'm sure everyone on this call has been down and out, and there have been years where you got to work yourself out of bad decisions that you've made, and those are the worst years. You never want to work for free in that regard, but there could be a unique opportunity showing up right now.
How do you price at this point? How do you price your deal? How do you, when you talk about penciling out deals, how do you re-pencil? You'll run out of pencils at this point.
Why?
You need margin, right? I mean, land prices have been expensive for a long time, and so if you bought something 6 months ago and you're underwriting, the same things, maybe it's troublesome, or maybe your construction costs are about to go down 30%, and by the time you deliver the product, rents are going to be flat, and so you got to leave yourself enough meat on the bone to make mistakes. And what happens in New York and what's happened the last few years is there has not been a lot of meat on the bone. It's been very difficult, and mistakes come easy. Risk is mispriced, and people think they can go build construction and they're going to get paid 25 or 50 basis points for it. Like that's not enough return for that risk and exposure. And so you got to make sure you get your risk reward right. You got to make sure your basis is right, and you have enough margin to make mistakes or to have the world change on you.
Steve?
I agree. If you were going to ask me what my opinion is on an item, I couldn't say it. I couldn't articulate it better than Ryan and Miki. This is a very complicated, sophisticated business, and you better know the politics of New York and what the trend lines are in construction loans. And in a low interest rate market, could we be going towards deflationary conditions, or could it go inflationary? I mean, this is where experience counts. And you know what experience is, Miki? Miki, experience is wisdom because you survived all your mistakes. Mm-hmm. Because how many examples are there of those people who don't survive their mistakes? So and that's why both Ryan and Miki are saying that. This is a tricky time, and you got to be very, very careful.
Mm-hmm. In terms of marketing, actively marketing units, so it's one thing if we're talking about sitting on the sidelines, let's say, for a month or two, but let's say this is the new reality for the next 6 months. For those of you in new development, which I believe is all of you, what strategies how would you change tack when marketing your new development inventory? Would it be, more investment, for example, in your virtual buildings and virtual showings? Are you going to make that, a highlight, or how would you go about doing that if this is, let's say, this lasts past the summer?
So we are lucky enough to have to have 0 units, 0 inventory of units to sell at this point of time. But we are very close to launch our next project on the Upper East Side. And obviously, in this condition of the market, I'm not rushing anyway. I have a very long time to complete the project. Instead of opening the sales office in the next couple of months, I will wait maybe to September, October, or maybe after the election, and maybe after the beginning of the year, the first quarter. I have the time to do that. I don't believe that we can sell, and I'm sure that a lot of the viewers are also brokers that are trying to make a living right now, and it's very difficult to do it. I just don't believe that you can really transact a sale deal, just by virtual showing. I don't think this is the case. Buyers really want to see, they want to touch, they want to feel the product. You can deliver a lot of the information online or by virtual reality, one way or another, but at the end of the day, they want to see and touch. And I think that with all of that, we'll have to wait a few months, and I don't know how long, until we'll have an opening and people will be able to come back and interact with each other.
But you used to sell off floor plans all the time back in the day, right? When the market was incredibly hot, you used to sell.
But still, you need a sales office, which we are building a sales office, and they need to come to the sales office and to experience the dream that you are building, what you're creating for them. Look, what we all do, we create something. And we put a lot of effort and years of design and effort to create a product, and we all are very helpful that the market will respond, in favor of the product. So, even a sales office, you create an experience, and the buyers are coming, and that's what they need they need to touch and feel and experience the product that you created. It's not possible to do it right now, and I don't believe that only using virtual reality is the answer for that. So we'll have to wait.
Okay. Ryan, I want to bring you in. Just want to say we're getting a lot of questions in from our audience, and thank again our sponsor, Engineered Tax Services. So Ryan, you're the investor in, you do a lot of seed rounds, right? You lead a lot of seed rounds, which means you're making bets on the next generation of real estate companies and real estate startups. I'm assuming some of them are going to have some trouble keeping the lights on. So how are you, what kind of conversations are you having at the moment? And then who's got the resiliency you think to get past this or even benefit from this?
Yeah, so it's all over the place. We have a hospitality-based company out of Austin called The Guild. They shut down all of their short-term product, made some very difficult decisions to lay off a lot of people, but they were able to get their burn down to a place where they're going to be just fine, and they'll be able to turn this back on as soon as the world allows them to. You got to give these entrepreneurs a lot of credit because these are difficult decisions to make, and they moved very quickly. We're investors in Bowery, which is a tech-enabled appraisal company. And so I actually expected them to be down to zero, expecting transaction volume to come down to zero, and they're still booking business at a very healthy rate. So I was very surprised to hear that. That's a nationwide mandate of where they're doing appraisals. And so that was interesting. While I agree with Miki on the virtual side to buy and sell things, I do agree people need to feel and touch things. We're investors in Compass and in Preview. Brokers are an incredible bunch of self-motivated entrepreneurs, and they know who's in the market. They're going to feed information. They're going to keep things hot. We got an offer this week. We had people who wanted to come and look at a unit. They wanted nobody in there. Unlock it, turn on the lights. We'll come in, we'll leave. You can lock it up when we left. We accommodated that. I don't know if we can still do that. I think the rules have changed since that has happened. But they're on top of that. On the rental side, it's really interesting because everyone's like, well, I'm not leaving or I can't leave. How do you deal with the rental world? We have a company in our portfolio named Doorkey, and Doorkey is essentially, instead of utilizing a broker, utilizes the departing tenant to show the units. Mm-hmm. And so they're now doing that virtually, and they're able to do it several months in advance. So if you want to move over the summer or even in the fall, some of these people know that they're leaving already, and they're happy to take you around the apartment. Not only that, they're going to tell you what's good, what's bad, what the amenities are. And so it's a really good sort of end-to-end platform that can be done completely virtually. And so they're going to be a net winner in this world that we're in right now.
In those conversations, it's still interested in, people would be like, well, we planned for this, we planned for a downturn, we planned for a change but we could not have planned for this. This did not even enter the basic consciousness until, mid-January? I think that was even only a few people thought about it then. But those conversations must be pretty interesting and difficult, Ryan, to have with your founders.
We're telling them to plan for, zero revenue at 6 months. And whether that looks like 50% revenue for a while or whatever it is, if you can survive that, we are very confident that these companies will be able to turn on their revenue mechanisms again. There is a harsh reality that a lot of people are being furloughed and laid off, and these are a lot of good, quality, talented people. And so we're doing our best to move them around to other opportunities that may exist in our portfolio or outside of our portfolio. But as this machine turns back on, as these younger companies turn back on, they're a little more vulnerable because they're typically raising capital for an 18 to 24 month period. Mm-hmm. It's been a very healthy capital raising season before this. And so fortunately, the great majority of them are well capitalized and making decisions to make sure that they're still around next year. And we think they will be.
We have another question just about debt brokers. We talked about, the investment sales market might be slow for a while. We talked about what are debt brokers, what in your opinion, how do they keep busy or maybe sane is the better question at this point?
Is that for me, Heidi?
It's up to you guys, whoever's having the conversations.
I think, look, I mean, we do a lot of business with sophisticated mortgage brokers. Mm-hmm. They are they can be very, very impactful, particularly in a market like this. When Miki talks about a lender of his who is a well-heeled lender with a good balance sheet, who may be syndicating, but is going to be judicious about how he syndicates because there's risk in a syndicated construction loan. This all goes to who you're doing business with. And so I think rational, prudent, sophisticated mortgage brokers, they're a big deal. We have our own relationships, and so, but that's not to say that we don't avail ourselves of good, solid mortgage brokers.
And I agree. Mortgage brokers were obviously the leading mortgage brokers were very busy in the last year or two, but they're going to be extremely, extremely busy in the next few months because there are a lot of issues in the market, and they will work very hard to find the replacement, refinancing, or equity infusion into existing deals.
I wanted to, this is a difficult time and we've all acknowledged that, but I also know that you all are developers, you're investors, and you're always looking for opportunity, even in times that are extraordinary like this. So I wanted to ask if you've seen any big opportunities come up in the wake of all of this. I know it's only been a few weeks of madness, but any funds that you're raising, any sort of white space that you're seeing in the midst of all this? And we're talking just, as a business, we understand this is a tough time. Ryan, anything from you?
Yeah, I mean, you're starting to see some stuff on the debt side. You know, when you look at the financial providers and who's in business and who's not, it seems that the private capital part of that market is looking to sell off some paper and looking to risk down. And so there's opportunities there. You know, I don't think they're great enough yet at this point. I think there'll be bigger opportunities to come. But until you can really understand supply and demand, until you can understand if that cash flow from last year is going to look like a cash flow from this year, or if half your tenants aren't paying rent, it's really hard to put a bid on something. I also think it's really hard to understand your own portfolio's risk without understanding that as well. And so, you know, I'm sure there'll be some great deals to be had this year. You know, I'm sure we'll get a few of those done, you know, on our side. But, you know, everybody's sort of in a wait and see right now, and, you know, trying to figure out how to get through this as best as possible.
And in that sort of the time that you're waiting and watching, have you had to make any difficult decisions, all of you in your companies, about, you know, restructuring, layoffs, what we're seeing in the news and happening in pretty much every sector? Let's talk a little bit about your own shops for a minute. Miki?
So the answer is no. The last thing that I will do is obviously to lay off any one of my team members, and I think I what Steve said before, I agree with him 100%. I had the discussion with my employees. I think they are doing fantastic jobs. There is obviously there is a trust situation right now because all the employees are sitting in their homes or apartments or wherever they are, and they are doing the best that they can to perform. It's not the same as being in the office. Our construction managers are still going to, we have three construction sites. They are still going on a daily basis because they are considered, and I guess that I'm also considered as essential employee. So we have the right to go and inspect the sites. So, you know, at this point of time, we are thinking about the next few months, and if things will get much worse than what we see right now. But I think at this point of time, we are ready to ride the storm.
Got it. And Steve, for you, which sectors or which parts of your portfolio, or in general in the real estate market, do you think are going to take the biggest hit long term? So short term, we're seeing obviously hotels, retail, but in the long term from this, do you think there's any systemic, parts of the portfolio that will take such a hit that they will probably have to be reimagined?
look, this goes back to what Miki was talking about before, where he said, I don't know if you remember the comment, but he was talking about 911, and he was saying that nobody ever really wanted to go up more than 40 or 50 stories after that event. And then we started building 80, 90, 110-story buildings. So that's the question. That's the big question. What's going to happen? There are plenty of industries that, as we know of them prior to this event, are not going to exist in the form that we knew of them. And we don't know what the trend lines look like. Do people feel that they're going to socially isolate on some sort of permanent basis from now on, or will it take a number of years to change their habits back? I think it's hard to tell. What's the ramp on an existing hotel? Can you build a hotel today and deliver in 2.5 years and expect that you're back at normalcy? After 9/11, hotels came back from a demand standpoint in 2.25 years. Well, we still have that. And I think from a residential standpoint, we're always going to need residential, but it's the politics too. I would bet you, if I said to Miki, do you believe that maybe as a result of this event, there's going to be a sea change in the way politicians think about regulation, taxation in New York? Are we going to continue to talk about millionaires tax, pied-à-terre tax, all those different things that I believe in some respects drive down demand? In these kind of conditions, when New York City has a budgetary crisis because there's not bonuses on the street, when there's vacancy, are we going to continue to hear some of that noise, which I think was unacceptable? And so, we could have a lot of good things that change out of this, and good discussions. And I don't just mean good for the development business. I just mean good for our society as a whole, that we get sort of more towards the middle with each other.
Mm-hmm. I always like to hear that positivity, even in a time like this, because that is what makes this industry so interesting for us at The Real Deal to cover, to see how you navigate times like this. And again, we appreciate you very much coming on in the midst of something, right? We know that no one's really figured it out. So we definitely appreciate you coming on at this time, sharing your insights with our viewers and our readers. So this has been Hitan Samtani with The Real Deal. I want to thank again our sponsor, Engineer Tax Services, and we'll see you for our next edition of TRD Talks very soon. Thank you.